There's only 21 days left until this huge Bitcoin event, plus Chainlink and Ethereum are in trouble. This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Follow us on Twitter, AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Introducing Altcoin Buzz Alpha. Now, manage your crypto portfolio with regular updates and top insights for only $15 a month. Get hot Web3 trends, undervalued crypto gems, daily portfolio strategy, and responses to your crypto queries. For more information, check out the links down below. Bitcoin starts the last week of September with a retest of $26,000 as a stubborn range persists. Having shaken off a hectic week of macroeconomic events, Bitcoin has plenty more to weather before September is over. The United States gross domestic product figures for Q2 will come on September 28th, with personal consumption expenditures or PCE data following the day after. The highlight, however, will likely come in the form of a speech from Jerome Powell, chair of the Federal Reserve, a week after it opted to hold the US interest rates at current elevated levels. Inflation remains a major talking point into Q4, and Bitcoin still lacks direction as week after week goes by without a clear upward or downward trend emerging. Trader Rhett Capital continued to track what he suggests could be a repeat of previous Bitcoin price behavior. He argued that 2023 might end up looking just like 2019, its counterpart from the last cycle. He suggested Bitcoin could follow the same bearish fractal from 2019 to drop lower in this macro range. Rhett Capital put the potential fractal downside target at near $20,000. According to Whalewire, Bitcoin's value appears to be influenced by developments related to China's Evergrande. On Monday morning in China, the real estate developer abandoned their restructuring plan, causing widespread anxiety and resulting in a rapid 24% drop in stock prices. After sideways price action for nearly a week, Bitcoin also saw a volatile spike and drop. But why does this have an impact on Bitcoin's price? Many speculate that Evergrande might be the primary commercial paper backing Tether's stablecoin. Despite repeated denials from Tether, they continue to withhold information about their commercial paper holdings. Given their history of dishonesty, investors are understandably skeptical. Additionally, Tether has a strong connection to Bitcoin, accounting for 70 to 80% of its trading volume and being utilized regularly to artificially manipulate its prices. It appears that the looming Evergrande crisis may potentially exert an influence on Bitcoin, so it is advisable to exercise caution. Crypto Rover on X had a good point yesterday, saying in 22 days, which is now 21, we'll reach the second review deadline for the spot Bitcoin ETFs. It's worth noting that if these ETFs get approved, it could be on an unexpected day. It could be happening any day now. And it is true, it doesn't have to be on that exact day, it could be earlier. However, if it isn't approved, usually they wait until that date to say so. I think it is more likely that it gets delayed until next year, but anything can happen, so always best be prepared. Like Elio Trade said, 2024 has so many bullish catalysts for Bitcoin. Spot ETF, rate cuts, US debt buybacks, election year, and the halving. And it turns out last week's Bitcoin pump was due to MicroStrategy acquiring an additional 5,445 Bitcoin for $147.3 million at an average price of over $27,000 per Bitcoin. Also, make sure to check out Randy's Bitcoin TA video later today to see what levels you should be watching out for. Blockchain intelligence platform Arkham Intelligence recently identified that crypto exchange Coinbase holds almost 1 million Bitcoin in its wallets. The coins are worth more than $25 billion at current market prices. According to Arkham, the exchange's holdings amount to almost 5% of all existing Bitcoin. Arkham said that Coinbase holds a total of over 947,000 Bitcoin, and at the moment, Bitcoin's circulating supply is just around 19.5 million. While Coinbase holds over $25 billion in Bitcoin in its wallets, the exchange only owns around 10,000 of all the Bitcoin it holds, which is worth roughly $200 million. Meanwhile, community members expressed varying reactions to the news about the amount of Bitcoin the centralized exchange holds. Some believe it to be a sign to withdraw their Bitcoin from exchanges, warning holders to not wait until exchanges start to halt withdrawals. Others say that since there are legitimate concerns over cold wallets, there's no good way to store their assets. And also, Coinbase has secured an anti-money laundering compliance registration from Spain's central bank as part of its ongoing expansion across Europe. According to a September 22nd statement, the registration with the Bank of Spain now means that Spanish users will be able to retain custody of their crypto assets on Coinbase, as well as buy and sell crypto assets in the euro. They highlighted that almost 1/3 of individuals in Spain have a positive outlook on digital assets, with 29% of adults in Spain believing crypto is the future of finance. Additionally, it noted that crypto has become Spain's second most preferred payment method, surpassing traditional bank transfers. We also recently just posted a video on how to rent NFTs for free, which I recommend checking out, link down below. According to Santiment, Chainlink continues to be one of the best crypto performers in September. Unlike many other assets, its price often sees an initial lift when Link moves to exchanges. Its price is up 23% in 2 weeks as exchange supply now flows back into cold wallets. However, decentralized Oracle network Chainlink has downplayed a recent change in the number of signers required on its multi-sig wallet, a move that garnered backlash on social media from vocal critics. Crypto researcher Chris Black was among a number of users on X who called out Chainlink for quietly reducing the number of signatures required on its multi-signature wallet from 4 out of 9 to 4 out of 8. The 4 of 8 multi-sig requirement is a security measure that requires 4 out of 8 signatures to authorize a transaction. And Black drew attention to an original post from a user that showed that a wallet address had been removed from the multi-sig wallet without any announcement being made from Chainlink. While members of the crypto community were quick to raise their concerns with the move, a spokesperson for Chainlink said that the update was part of a standard signer rotation process. Black has long been an outspoken critic of Chainlink, going as far as saying the entire DeFi ecosystem can be intentionally destroyed in the blink of an eye if Chainlink signers were to ever go rogue. According to Black, the centralization risk inherent in Chainlink extends to a range of mainstay DeFi projects, including Aave and MakerDAO, which rely on Chainlink's oracles for price data. Our partners at the Label Foundation and LG Electronics have just announced a collaboration to launch the first Web3 native music streaming platform on a smart TV. This collaboration marks a monumentous step towards redefining the music streaming landscape globally. Central to this partnership is the integration of the Tracks music dApp in the global network of LG smart TVs. Tracks will serve as a complementary background music service for LG smart TV users across the globe, allowing them to enjoy an extensive catalog of music free of charge, while also having the opportunity to earn rewards through Tracks. This collaboration is not only poised to achieve remarkable milestones, but it also represents a noteworthy moment in the history of music streaming. It heralds the first ever integration of Web3 technology into TVs, ushering in an era of decentralized music streaming. The partnership with LG Electronics marks the initiation of Tracks' global venture to integrate into people's everyday experiences through an expanded range of devices, including smart TVs, mobile devices, and others. Ether has reverted to be inflationary amid plunging activity on Ethereum, which could weigh on the token's price. Network fees, a proxy for usage, plunged more than 9% this week to $22.1 million. Consequently, the supply of ETH, Ethereum's native token, has been increasing as fewer tokens were destroyed or burned to verify transactions than were created. The decline in network fees is partially driven by the adoption of Layer 2 networks and will likely continue into the near term. This trend may be putting some pressure on the second largest crypto asset, as its supply has been growing over the past month, reverting its deflationary trend. Ether's deflationary narrative emerged after last year's merge, a major upgrade for the network that saw Ethereum transition from a proof-of-work consensus mechanism to a proof-of-stake, altering the cryptocurrency supply dynamics. During busy periods, the network burns more tokens than creates, curbing its supply, which is usually considered bullish for the price. However, when the network demand is low, the dynamic flips. JP Morgan analyst said in a report earlier this week that Ethereum's much-anticipated Shanghai upgrade failed to boost network activity, as transaction counts, active addresses, and total value locked on the blockchain have all fallen since April. Crypto services provider Matrixport reiterated its negative outlook for the crypto asset compared to Bitcoin in a Friday market update, citing shockingly low revenue and lack of buzz around the next upgrade. The firm forecasted earlier this month that ETH could fall to as low as $1,000 if the trend continues. Now, while this does sound bad for Ethereum, I think this is just a slow period, and I agree with Lark Davis, who said total Ethereum on exchanges keeps falling, now at its lowest levels in years. Ethereum in staking contracts is basically up only, currently at 28 million. There is a 2-year queue for all ETH to exit. Spot ETH ETFs are coming, no one is ready for this. Right now, we're just in a slow period where there's not a lot of interest in crypto or NFTs, which fueled a lot of the ETH fees on Ethereum. When more interest comes back next year as Bitcoin's price goes up, I believe ETH will turn deflationary again, and we just need to be patient. We also just posted a video on a crypto trend you should stay away from right now, as it could be falling soon, which I'll link down below. That's it for your Altcoin Buzz News Update. I'm Cody Buffington. Thanks for watching.